All right, what's up, everybody? It's another Financial Friday, and hopefully, I keep this up. I don't know. The last video did all right, so we'll see if this if this is what you want. So, this week we're going to be talking about tax credits. Last week we talked about tax deductions, and I kind of answered pretty much all the questions that were in the comments from last week, and they weren't anymore today. So we're just going to go ahead and move on. If I missed something, let me know in the comments though, and I'll address it in the comments. So, what are tax credits? So, I have it defined as tax credits lower the amount of tax you owe in the form of a cash payment. So, we're going to get into two examples in just a second. But there are two different types of credits. There are refundable credits and there are non-refundable credits. So refundable credits will pay you even if your tax liability is zero. So if you owe nothing in taxes and you have a $2,000 refundable tax credit, you're going to get a refund. A refund. It's not really a refund because you didn't owe any tax, but you're going to get a check from the government for $2,000. Likewise, there are non-refundable credits, and what they do is just bring your tax bill to zero. So it doesn't matter if there's an overage, it will not put you in this negative and they end up owing you. So there are two different types of credits here. All right, so let's get into an example to show you the difference between credits and deductions. Real quick, just a recap of deductions. A deduction lowers the amount of money you made for the year. So if you made $100,000 and you had $15,000 and deductions, or you just took that standard, I think it's $12,000 deduction that everybody gets from the government, it reduces your income and you only pay tax now on the 100,000 minus the 12,000, which is 88,000. So now you owe tax on $88,000. That's what deductions do. They lower the amount of money you made, so you only pay tax on this new lowered amount. That's a deduction. A credit now doesn't do that. It doesn't lower the amount of money you made. It has nothing to do with your income. It has everything to do with your tax bill. So let's say in this example, both of these examples, you have a tax bill of $2,000. So you filled out your W-4 correctly and you filled it out in such a way where at the end of the year you planned ahead, you owed $2,000, but you qualify for credits because you thought ahead. So you say, well, let's start with a non-refundable credit, which is like buying an electric car. So you can qualify for up to $7,500 depending on how large the battery is in the car. That's another video. That's more complicated, but you get a credit for buying a plug-in hybrid or electric vehicle. Now, the credit is up to $7,500. It's non-refundable. So in order to take full advantage of this $7,500 credit, you gotta owe $7,500 in taxes. But in this case, you only owe $2,000, so you're not gonna get any extra money. The most this electric car credit will benefit you is just $2,000 because that's all you owe. So you don't get the full $7,500. You just get $2,000 of it because that's what you owed as a tax bill, and now your tax bill is nothing. Now, if we move on to refundable tax credits, and you can use both. Let's say you bought the car. Well, let's save that for a third example. So let's say you didn't buy a car now. You just have this refundable tax credit here. And I don't know why this keeps changing from green. But let's say you have a child. You just have one child and they're 6 years old. You qualify for a $3,000 tax credit. Now, this one is refundable, though. So let's say, again, your tax bill was $2,000 and you qualify for a $3,000 child tax credit. You will now get a check from the government for $1,000 because $3,000 minus your $2,000 tax bill leaves you $1,000, and you'll actually get paid from the government $1,000. So those are refundable tax credits. Now, let's say you shook things up. You said, well, what happens if I did buy an electric car or you had some other type of non-refundable credit? There's a whole long list of credits. I'm going to leave a link to some if you feel like any of those are interesting to you that you could take advantage of. Go to the IRS website and dig deeper, okay? Don't just take that article's word as gospel. Again, remember, always go to the horse's mouth. So let's say you did buy an electric car. you would use that first. That would eat up this $2,000. So now that's done. That got you down to zero. And now you get to add your refundable child tax credit, which will leave you with a $3,000 payment from the government. So it's good to know what you're doing. First of all, the deductions are going to bring your tax bill down to $2,000 or whatever. And then you start tinkering with your credits. You say, all right, well, I got a non-refundable tax credit. I'm going to use that to bring my tax bill down to zero. And now we're going to add these refundable tax credits, which will give me an actual check. So hopefully that made sense. Again, slices here, small slices. If you guys want to know more, let me know in the comments. If you have any questions about this, again, let me know in the comments. And if this was helpful to you, I appreciate if you liked it and shared it with somebody else who might need to know this information. And I'll see you guys next time.